Here's what I learned after 1 full month of studying and backtesting the Elliott wave theory. The key of the using Elliott method successfully lies in the counting the waves correctly and identifying the wave in which the market is currently trading in. That's it. Identifying the wave and you will profit from it. Today I will try to help you better understand the general characteristics of the different waves within the overall market structure. Learn this and Elliott wave theory will become much simpler before we begin. If you wanted more videos more often, please drop a like to help us with YouTube algorithms and turn on the bell so you don't miss when new content is released. One of the key points within the Elliott wave theory is the concept of the fractional nature of the markets. This means price patterns repeat themselves over and over again and on all time frames. Under the Elliott wave theory, there are two types price progress. The first are those price movements or waves that are aligned with the large trend. These price movements are referred to as motive waves. The second are those price movements are waves that are contrary to the large trend. These price movements are referred to as corrective waves. Motifs waves can be classified further as impulsive waves or diagonal waves depending on the format and location within the overall structures. Impulsive waves are the most common form of the motive waves and the easiest to stop in the market. Diagonal waves also moves the market in the direction of the trend. The difference is that the diagonal waves looks like the which easier explains or contrasting. Corrective waves are generally classified as easier flat surface zigzag structures, triangle structures, or the double or triple combinations. The basic from the Elliott waves sequence is the comparison of the 5 waves that make up motive waves, which are Webull waves 1 through 5. Following the completions of the waves 5 within the motive sequence, the market will develop into 3 waves retracement that moves contrary to this motive wave sequence. This retracement moves consists of 3 waves labeled as the waves A, waves B, and wave C. If you are just starting, there are only 3 unbroken rules as it pertains to the Elliott waves principles. The first rule is that wave 2 cannot retrace more than 100% of the wave 1. The second rule is that wave 4 cannot move into territory of the wave 1. And finally, wave 3 cannot. The shortest wave almost waves 1, 3, and 5. So, like I said, the beginning of the video, if you want to recognize the current wave of the market, you will be ahead of the most traders. Now let's share the characteristics of the various waves within the Elliott waves structure in the contents of the bull market. Pay attention to each descriptions, and by the end of the video, Elliott wave theory will no longer appear complicated. Wave 1 begins to impulsive sequence. During this wave, price began to bounce higher after one sustained downtrend. The sentiment of the market is very bearish at the start of the wave. As wave 1 moves higher, most people see these upside price movements as just a bear market, really, and many investors and traders consider wave 1 as a good opportunity to initiate new short positions or add to their existing short positions. Waves 1 is generally the least predictive waves within the entire Elliott Waves structures. There is really no way to know how long the wave will last. However, at some point it will become clearly apparent that wave 1 has ended and a significant slide high is reached and prices begin to more lower in the bearish directions once again. Wave 1 generally subdivides into the 5 smaller waves and can sometimes appear as the leading diagonal structures. After wave 1 completes, the next one is sequence will be wave 2. Wave 2 will move counter to the wave 1 and will retrench a large portion of the wave 1. Often wave 2 will retrace wave 1 by the entering 50% retracement, 61% retracement, or even 78% retracement. During wave 2, investors and traders begin to feel assured once again that the downtrend has continued. However, the market will fail to break below the wave 1 low. Remember one of the unbreaking rules within the Elliott wave theory, which is that wave 2 cannot retrace below the start of the wave. Informed traders will begin to start to recognize the patterns and start their positions to the long side the market. Wave 2 will generally take the form of the zigzag corrections or flat corrections. In entire case, the retracements will be fairly deep. Additionally, since wave 2 is corrective structures, it will develop as the ABC pattern comparison to 3 waves. Wave 3 offers the largest potential of the profits as it's usually the biggest and the most powerful waves within the overall Elliott wave structures. The psychology trades during wave 3 is generally one of the growing optimism, although many of an earlier sellers will still resist the optimistic outlook during the earlier stages of the wave 3. It will become increasingly evident to the most trades that the trend has shifted and the market are poised to move higher. After the break of the slight height of the wave, prices will begin to accelerate upwards as more and more traders recognize the bullish sentiments and starts taking long positions. Additionally, many sellers will have their stop triggered at the waves 1 slight high, which adds future fuel to the upper price movements. If you identify the third wave, you need to join the trend as quickly as possible in order to take advantage of the explosive moves that are characteristics of the wave 3. Those who wait a pullback or adjustments to get in will often miss the entire move, as wave 3 offers very little to the way of the pullback, and when they are present, they tend to be quite shallow. Wave 3 will often travel 1.618 times the length of wave measure from the end of the waves 2. The second most common projections for the wave 3 is for a travel 2.680 times the length of the wave 1 measure from the end of the wave 2. One of the guidelines within the Elliott wave principle is that among waves 1.3 and 5 of the influence sequences, there will be one extended wave which is quite larger than the other two. In most cases, wave 3 will be a short expanded wave. Wave 4 will follow where 3 and will retrace a portion of the wave 3. Typically, wave 4 will be shallow retracements and will often terminate at 80% or 50% of wave 3. Since wave 3 is often the longest wave within the overall sequence, we can expect wave 4 to be less aggressive in the percentage terms that wave 2. Also, we need to keep in mind one of core rules within the Elliott wave theory during the wave 4. That is, wave 4 should not overlap into the theory of the wave 1. If it does, then you need to rely your wave count as its unbreakable rule. Wave 4 is also often seen as the profit-taking wave because those traders that both in wave 3 are sitting on the highest amount of the profits. Many of these traders will be to liquidate their positions and lock in their profits. This creates the sideways price movements that is often prolongates in the true wave 4 often takes the form in the triangle. However, wave 4 can also be a flat formation and sometimes informs as zigzag patterns or some combinations. The price actions often appear range bound with price moving back and forth without any clear directions. Wave 4 brings with the whip sharing price action that often generates false breakout on entire side of the market. You need to be very careful when taking new positions during wave 4, as you are more likely to lose money during these directions market conditions. Wave 5 is the final length within the Elliott wave impulsive sequence. It moves the directions of the overall turn similar to the wave 1 and wave 3. During the progressions of the wave 5, almost everyone is bullish. Wave 5 is often considered a retail wave because it's during this time when most retail. The momentum behind the bullish activity is wave 5 will be the less dynamics than during the wave 3 progressive. This basically means that volatility of the price movement will be more substantial than the seen during the wave 3. During the late stages of the wave 5, we will also see technical divergence patterns from between the price actions and the many momentum indicators such as RSI, stochastic and the MACD. This momentum divergence signals the terminus in that the velocity if the price movement higher is diminishing and we should expect the upside trend to reverse the course soon. Along with the momentum divergence, wave 5 will often register lower volume compared to wave 3. This is another indication that the trend is weakening and that profits should be locked in as the potential reversal is limited. In terms of the how far wave 5 will travel, well, wave 5 will terminate upon reaching the lengths that equate to the lengths in wave 1. The next most likely projection for the wave 5 is for the travel distance of the 61% the length of the wave 1. Both of those projections for the wave 5 are measured from the end of the wave 4. The end of the wave 5 brings with it complexions of the impulsive sequence, more specifically the impulsive sequence consisting of the wave 1 through 5, and those at the end of the wave 5 we can expect the corrective structures to follow, which will often be three wave patterns: wave A, B and C. Wave A starts the corrective sequence and during this phase most traders are still very bullish and considering to the wave A pullbacks as just another minimum retracements. Wave A is somewhat similar to the wave 1 in the structures. During both of those waves, progressive the market participants are heavily positioned on the one side of the market depending on the directions of the large trend. However, just as in wave 1, some experienced traders being to recognize overbought market conditions during the wave 5. Wave A is often sharper move and may sequence as entire 5-wave patterns or 3-wave patterns. Wave B is the second round of the corrective structures and follows waves A. Wave B is often considering a bull trap because it tends to draw in a lot of the trades believing that the exciting trends is still healthy. However, this is far from the case. Wave B will be fairly short-lived pattern and will often fail to surpass the wave 5 swing high. Wave B will often create the double top forms in which we'll try to test the wave 5, extend and fail to breach it. This doesn't always happen, however, it is quite characteristic for the wave B to terminate just short of the wave 5 extreme. Wave B is often finally deep retracements and real retracements. Wave A by the entering 50% and 61% or 78%. The subdivisions within the wave B itself. It's often seen the zigzag patterns, but sometimes it will form as the triangle as well. One of the best trades within the Elliott Wave move as nears to terminal point. After wave B compares, wave C will begin. This wave makes the final length within the entire corrective structure. So when the wave B slide wall is breached, that even will mark a turning point. There more and more traders will come. After this distance, the next most likely area for the wave C to terminate would be when it travels to the distance of the time the length the wave A. Now that you know the characteristics of each wave, so let me share the simple checklist to apply the sequences, print it or write it down and use it every time you are unsure about the current wave of the market. Wave 1, wave 3 and wave 5 are trending. Wave 2 and wave 4 are corrections of wave 1 and wave 3 and wave 5. Wave 3 must not be shorter but does not have to be the longest. Wave 2 can retreat up to 99% of the wave 1. Wave 4 should not go into the price area of wave 2. Wave 4 never enters the price territory of wave 1. Wave 2 and wave 4 must display alternations in as many ways as possible. That's it. Wave 2 and wave 4 must be different in as many waves as possible. Afternoon occurs between the wave 2 and wave 4 as either price time or pattern type price. Wave 2 when compared to the wave 4 may be obviously smaller, larger in the prices time. Wave 2 when compared to the wave 4 may take much more or less time. Pattern wave 2 may be a simple ABC when 4 could be more complex than ABC or even the triangle when the two clouds be flag formalized when the cloud of B zigzag or the vice area. If you enjoy this type of the context and want more Elliott Waves videos, leave us a like to show your support and help us with YouTube algorithms, and in future videos we will go even deeper with the more advanced strategies that can be applied to the day trading and the swing trading. Until next time.